Okay, welcome back, everybody. I think we might start, given we have an online audience as well. So welcome to everyone here in the room and everybody online. I'm delighted to have you for our panel session here for the next 50 minutes or so. We'll continue on our theme of sustainability and get perspectives from both sides of the table, reflecting on lessons from Wave 1 CSRD reporters, how boards were preparing, and what's coming up. We'll talk and then turn to the reporting challenges posed by geopolitical and macroeconomic uncertainty before diving into oversight responsibilities for emerging technologies, particularly AI, cybersecurity, and data governance. Finally, we'll consider the broader challenges facing audit committees, including skills gaps and the future of assurance in a tech-enabled world. So if we start with a Slido question for you to answer while I introduce our panel. The question is, which of the following areas do you believe your audit committee is least prepared to oversee? Okay, so while you get on with that, we'll maybe introduce the panel. One on my immediate left is Brendan Lenihan. Brendan brings extensive experience as a chartered accountant, management consultant, INED, and mediator. His career spans over 3 decades, including time as a partner with Anderson, group director of a multinational property company. Brendan is also a former president of Chartered Accountants Ireland and has chaired audit and risk committees for major organisations such as the HSE, Bus Éireann, and An Post. Currently, Brendan serves as chair of the board at Irish International Trading plc and leads the advisory board of Regan Wall. He's also an external member of the Enterprise Ireland Investment Committee. Through his firm, Navigo Consulting, he advises across Ireland and the UK on governance, strategy, and performance. Next to Brendan is Sinéad McHugh. Sinéad is a partner with Deloitte Ireland, where she leads the consumer technology business within audit and assurance. So with over 20 years' experience, she's worked extensively with publicly listed and multilateral clients, specializing in IFRS, US GAAP, PCOB standards, and internal controls. Her expertise spans complex audits, advisory projects, including GAAP transitions, public offerings, and M&A transactions. Next to Sinéad is Conor Holland. Conor is a partner in KPMG Ireland's assurance practice with over 15 years' experience advising both domestic and international clients. His work focused particularly on financial services, including banks, asset managers, payment institutions, with additional experience across real estate, energy, and retail. Conor currently leads ESG reporting and assurance for KPMG and was the lead engagement partner on several Wave 1 CSRD reporters. So he brings valuable insight to the evolving reporting landscape that we will be talking about today. Last but not least is Aisling Kennedy. Aisling is an actuary and full-time independent non-exec, serving on the boards of several regulated financial services entities across Ireland and the UK. She chairs the audit committees at Everest Insurance Ireland, State Street Fund Services Ireland Limited, and is on the chairs the sustainability committee of XBS Group. She is the chair of Echo Assurance and MAB Support. So in addition, not to mention all of the other roles, Aisling also serves as chair of the board of IAASA. So a fantastic panel with a wealth of experience and expertise, and we're delighted to have them here today. If I go back to the Slido question, let's see what we got to. So we have, go back there. I think a clear winner with AI deployment and governance, so it's good that we're talking about that, and also be covering it in the last session. We also see cybersecurity, but interestingly, sustainability reporting is down. I think very different to last year. So I think I'll take that as a positive. And nobody felt they were well prepared for all the areas. So interesting. Okay, we kick off. I'll start maybe with sustainability reporting and assurance. And if we think back to last year, the panel session, the discussion was around preparedness and what the sustainability statements might look like, and to compare it to where we are today, with the Wave 1 issuers having come out on the other side. Conor, if I can start with you, what were the key challenges and lessons learned from Wave 1 CSRD reporting, and how did audit committees take ownership of the process?
Yeah, sure. Thanks, Martin. So I did read the sustainability reports, and Tom captured a lot of the challenges actually. So I'll try not to repeat too many of them. Maybe as a bit of a preface, I think it's unfortunate that like the ESRSs or the CSRD is a reporting directive. So all of us in this room had to deal with the constructs of what the reporting was required and what the assurance or attendant assurance requirements were. And that's unfortunately conflated a bit of noise around the importance of sustainability. And they're not necessarily the same thing. And in fact, like Tom, I think, to be fair, didn't really bring to the fore of how important Ryanair, as an example, how seriously they take sustainability as an organization. So I know he had a bit of a facetious comment with Michael, but actually they took it really, really seriously, and they lamented the noise that they felt would come with the reporting or the CSRD, and that actually they wouldn't be able to tell their story properly. So I think as we look ahead, we get on to the challenges in a moment, but as we look ahead, the pare back of the actual reporting requirements into something that's much more manageable, much more coherent. I would say probably more climate focused, to be honest, and maybe less on the S and the G stuff. Albeit interestingly, that's where a lot of the challenges were in that area. I do think we'll have a much more coherent framework, and I think it's incumbent on us in the room to then remember and extol the benefits of sustainability and the risks and the opportunities that come with sustainability. Because unfortunately, there's just a lot of noise around it at the moment, and a lot of it has come from the ESRSs, which wasn't the intention or the genesis of the ESRSs. On challenges, like it was really, really difficult. I had a couple of audit committees that were uncomfortable for everyone in the room. And the first time in my experience with PLCs, where you're genuinely having conversations of you've committed to the market to release in XYZ date, at the moment on the sustainability side, that looks challenging. We did at one point for one of my clients have more people on the sustainability engagement than the financial audit, which was somewhat perverse and wasn't the intention, but just a consequence of how difficult it was. And a lot of that was, I think Tiernan actually kind of asked us a couple of minutes ago, going out to parts of the business who've never before had to deal with auditors or reporting and not really having a rashers what was required or what was needed. And that made it really, really difficult for then finance to come back, try and give that in a message that gave the audit committee some reassurance, and still meet really, really tight timelines. So I think those looking who are not in the Wave 1 cohort, the prepare early really can't be said enough, and understand where the tentacles in your business will go for gathering the information. On the Wave 1 cohort, I think we'd see a much more judicious approach to disclosures this year. There was a comment earlier, I think, about greenwashing. I must say, like, in my experience with all the Wave 1s, I couldn't be further from what I experienced. And in fact, the opposite of nearly giving too much information to be really safe on everything is material. We need to give everything. I think we'll see a lot less of that this year. In fact, I know we will. And there's been the 160-page references gets commented on a lot. I think those page numbers will come down quite significantly and will be much more judicious and focused. And the only other piece for maybe audit committees, I think having your charter updated to be clear on your roles and responsibilities is very, very important. There was a lot of tension within management initially as to who owned it, and no one was queuing up first, but that caused tension. And then when it came to the audit committee, you, to be candid, had people who perhaps weren't the right people to be telling the audit committee why their biodiversity disclosures were okay. Just not the right people. So having clear lines in management who owns it and having a clear charter, particularly if you have a sustainability committee, as to where those roles and responsibilities reside. And I think that's probably, the only other piece on the DMA, Tom's right, like that is really, really important. And it is your primary mechanism as to how much you will have to disclose. I did actually, funny enough, a couple of weeks ago, have a client who came into the board and they managed to bring in a topic. Now, they were strongly, strongly, strongly encouraged to go back and look at that again. But but the direction of travel, I think, is a more, and particularly if you have a look at the new ESRSs, a tighter approach to DMA, and like really having a look as, is it material? And keep in mind, and I'll stop now, but keep in mind with the stakeholder engagement, people will have views that it's material. You do need some overlay where just because someone in the business thinks that something is important doesn't mean you then need to give all these disclosures to the market. You really don't.
Okay. Okay. Just very quickly, is there any changes then in preparation for entities for this year in terms of like we're going into the second year in terms of how the approach and how that's going to be done? Is there less work being done or
Yeah, there's definitely less. Re-looking at the DMA, I'll be honest, there's some pare back of the DMA topics, but not as many as you'll think. I think it's more on, did we give too many disclosures that were arguably a bit superfluous and not entirely necessary, and pulling that back, more aggregation, more consolidation, because at the end of the day, you're still going to have to get an insurance opinion, so you can't just university decide I'm going to cut 50 pages and move on. It needs to be grounded in evidence. But the exercise that most organizations at the moment are taking is, where can we pull it back? And having regard to the new ESRSs, which give a clear direction of travel of where you could pull in data points. Yeah.
okay.
Thank you. Ashley, maybe if we turn to you from an audit committee perspective, how are boards approaching sustainability reporting and strategizing for sustainability outside of reporting obligations?
Yeah, I think to echo what Conor is saying, the simplification of reporting obligations is very welcome, but the proviso to that is, and you alluded to this as well, Conor, that we need to use the bandwidth that's been created to focus on transition planning, and I really see that distinction in terms of serving on an Irish audit committee and board and a UK one, where the latter is very much focused on transition planning, and the transition planning is mandated for organisations of a certain size. And those plans need to cover two fronts. Firstly, there's the decarbonisation that we've talked about to achieve the required transition. But secondly, there is positioning the business to adapt to the impact of even if we have the transition we want, but more likely now the impact of a delayed or a disorderly transition. And that likelihood is really increasing given the geopolitical headwinds. I would also, and I'm glad to hear Conor mentioning biodiversity, there's been a lot of focus on climate. And if you think climate is complicated, when you start to look at nature and biodiversity, it magnifies. With climate, you actually have one single key metric, which is carbon. With nature, it's so much more complex. And just a kind of a metric to bring it home, the World Economic Forum estimates that 50% of global GDP is significantly or heavily dependent on natural capital. And natural capital is being severely depleted. We are using it up, and there isn't a fresh supply. What I would say is, I think, and it's evident in the Slido results, the problem is boards have a lot of other pressing concerns, and many with a shorter time horizon. So allocating sufficient resources to sustainability will, I think, be challenging in the foreseeable future. I wanted to say just something else, Martin. You asked me yesterday about whether I thought that markets were appropriately pricing in climate-related risks. And the answer to that is, I find that hard to believe that markets are fully pricing in the impact of climate and nature-related risks. And that may be partly around time horizons. But I think it's sobering to think about, there's obviously hugely varying forecasts around the impact of climate change, but the more recent scientific work is suggesting harsher outcomes. And some of the recent papers are suggesting something of the order of 10% of reduction in global GDP for every 1 degree of global warming. And we're currently facing down probably of the order of 3 degrees unless we get our act together better than we have so far. So I would have a real concern that there is a significant market correction to come, and that's kind of a material in the financial services world that I mainly operate in. That's a material issue. Again, albeit that the risks related to the current scale of AI investment and a potential market bubble around AI does loom larger in the short run.
Thanks, Aisling. And I think that's a nice segue to Brendan. We're talking about climate risk and the climate agenda. In relation to sustainability and audit committees balancing strategic and political dimensions to sustainability reporting, do you have a view?
I think if this time last year, you know, the sustainability reporting was really, really in our face and up there, it's really about two things this year. It's operational resilience, and it's also about data governance. Data governance is the fundamental building block of the AI piece. So the world moves on, and you know, all of the outside of wave one, I think lots of other companies have slowed down to what's absolutely required of them in terms of climate reporting. There's probably one remaining question, which isn't for us, which is from a democratic governance point of view, how did it get this far? That it went so far this way and then has to be brought back to a point where 90% of the companies are now not going to be in scope, and a huge reduction in data elements. But that's not really for ourselves to change or to answer. But to pick up on Aisling's point, the climate risks actually are exactly the same as they were, if not worse, this time last year. And we now know that nature sends invoices in the form of extreme weather events, and will continue to send them. So I think any sensible audit committee is saying, okay, and I agree with Aisling on number one, have a transition plan. What is our plan to decarbonise? What is our plan in terms of people and community? Because we've got to be fair there. And also, what is our commitment to good governance? Because that is there, all three of those are the fundamental building blocks also of competitiveness, which is the big political test between the various blocks. Who is most competitive on this in the longer term? The planet, China, the US, the European approach. The answer to that is really important.
Yeah. Thanks. I might stay with you and maybe shift to the next topic on the agenda, financial reporting, accounting, disclosure challenges posed by current geopolitical macroeconomic risk landscape. That's a mouthful, and it's a loaded topic, particularly, I suppose, in light of shifting global dynamics. But can you give us a perspective on what audit committees see as key risks and uncertainties, and the challenges of the current environment and cultural impacts, and how these are monitored and managed?
Yeah, I guess there are four specific ones I'm going to touch on in a moment. There's a big cultural one, which I don't think we've encountered yet, but it's absolutely an anathema to audit committees. The culture in business at the moment is changing, can't but be changing. And there are concepts like might is right, truthful hyperbole, what's a little bit of exaggeration, you know, the tolerance for creating chaos has gone way up now. And the idea that you can push things, processes, people, systems to their extreme, and even if they break, that's not much of a problem, we'll just start again. Like, those are concepts that are an anathema to most audit committees. And I think there comes a point where we're going to have to be brave and stand by our principles, which is facts are friendly. You know, we've got to go back to, we have tolerances in terms of risks we take with people and with processes and with systems. There are boundaries. We need to bring professional skepticism to bear, not only in what's in front of us, but also what's not put in front of us, to balance out all of that. And we will probably have to get in the trenches and defend critical aspects of control systems that are undervalued by people outside of what we do. But if they break and they're not there, you'll see the impact of it pretty quickly. So I think that's the cultural piece that we've got to be really, really aware of. Just to touch on four others, and it will become very hard, by the way, to try and defend those. Tariffs is number one, obviously. Like at 30, 40, 50% tariffs, trade stops. But at 15%, which is where we've landed between the US and the EU, what happens is margin deterioration and a re-engineering of the supply chain. So there are 350 million really wealthy people in the US, but on the 4.6 billion in the rest of the G20 outside of the US, that's a huge market too. So what I'm seeing at the moment is US companies reorganizing supply chain, factories in Ireland and businesses in Ireland supplying the rest of the market rather than the US, retooling in terms of what's going on in the US. That has huge impacts in terms of stocks, in terms of capital assets, in terms of supply chain. The second geopolitical aspect is that competition between the blocs is intensifying. Tariffs, cyber attacks, competition around earth minerals, for example, rare earths. These will become really important topics. And the big risk hasn't really changed, in my view, which is China's claim on Taiwan. If that turns into some kind of kinetic action, the major source of semiconductors of production in the world will stop. And that is a massive impact on AI, digital industries, and a lot, including other products like automobiles that we depend on. The third one, I guess, that is on top of my mind is where your energy comes from. A lot of sustainability reporting is how much carbon it produces. As audit committees, we need to understand where energy comes from and security of supply issue, because that's also the currency of geopolitical conflict. And finally, and this is probably more micro, but not unimportant, there's an extent of personnel turnover at the moment arising from the working from home, how all that works out. And at the heart of every control system are really experienced, committed people. There's a lot of churn in that at the moment, probably too much, and that's something that I'm also being very mindful of. So I think the priorities have changed and the geopolitical risks have ramped up, and therefore our thinking needs to change both in a cultural sense and in terms of the issues that it will throw up.
Thanks. There's a lot there in that. Aisling, any, I suppose, other views on how to prepare?
Yeah, I mean, that's a very comprehensive list that Brendan has given, and I'd endorse all of it. I mean, I guess the key thing is, given all of these intersecting challenges, is to think about operational resilience in a very holistic way. Just, Brendan, you mentioned energy and cyber risk, and the other thing that I would add is obviously broader digital resilience as a key area of focus. And we've had some interesting conversations recently about the extra vulnerabilities that we have as an island nation, depending on a small number of undersea cables for connectivity, and increasing interest in the waters around our island. And many of our businesses here on this island rely on globally dispersed outsourcing partners and of course supply chains. We already have this as a key area of focus for operational resilience testing, but geopolitical concerns bring an extra dimension to that, as Brendan has mentioned. I have one micro issue too as well that has just kind of been a topic in some of the rooms I sit in, and that's insider risk. So particularly in IT and data sensitive functions. So we've seen cases where companies have unknowingly hired state-sponsored threat actors into IT functions and had some adverse consequences of that. And then to the talent management issue that Brendan has raised, I would add just the whole broad spectrum of talent management. Future talent management in audit is one example, but right throughout our enterprises in the world of AI, it's going to be a very different human resource landscape. And then lastly, I would just say, we don't have any crystal balls on boards, unfortunately, but we do have techniques that we can use, such as structured scenario testing, reverse stress testing, kind of well-established processes in the financial services space, and some other industries as well, but broader applications possible. And wargaming, also kind of something perhaps we can take from the geopolitical sphere. And then just to conclude, I would say, been rereading some of Nassim Taleb recently. I'm not sure if people are familiar with him, but I think the goal for the audit committee is to make the organisation anti-fragile. So that's an aspiration.
Martin, can I just comment
Sure,
briefly for a second, just as I put my audit hat on, with that comprehensive list of risks, important to be bespoke to your business as to how they apply and give meaningful information, as opposed to because they're the main risks and they're absolutely eminently sensible, but you see some clients where it's given War and Peace and all these risks that may not have the direct relevance to the business.
Well, it brings us neatly onto the next topic of the financial reporting of these disclosures and these risks. And maybe, Sinead, if I can bring you in there, how are companies managing that instead of, throwing the kitchen sink at it? Like, what should they be doing? What are they doing? What should they be doing?
Yeah, and Conor alluded to it in the sustainability and on the risk piece as well, right? Like the expectations in terms of the information that has to be disclosed has just been increased and increased. So like you have financial information, you have sustainability, you have risks, you have governance, you have strategy. And I think there has been a bit of a trend where kind of companies just add and add. Sometimes it's easier, right, to just add. I think also there's probably a sense that it's just less risky. So if you kind of say absolutely everything, then no one can ever say, well, you didn't tell me this. And then you kind of end up in situations where disclosures are very broad, they can be very kind of generic, not specific to the company. And really then the company's kind of narrative actually is getting lost because kind of everything is being presented as equally important. And then there's cost of compliance with it, right? I'm sure someone has a calculation of the cost of each additional page in an annual report and the levels of kind of review and rigor that has to go through. So that kind of disclosure overload, I think we're seeing a lot. I think in terms of kind of what I've seen for kind of good practices in companies trying to manage that and maybe areas that audit committees can challenge management on. I would say materiality is your friend. So I would kind of look at disclosures in 3 buckets. So 1, required. So is it required to be compliant? 2, essential. So is it a disclosure that's really essential for your stakeholders to kind of be able to assess your performance or understand your risk? And then 3, is it in a kind of nice to have supplementary box, that potentially could be housed elsewhere? And then apply materiality across all of those. So is it material? Should it really be disclosed? And kind of challenged to should we be editing? Should we be kind of prioritizing? I have seen kind of cross-functional disclosure committees. So again, where you have annual reports that have a lot of internal functions involved outside of finance. So, finance, ESG, risk, etc. And really that remit is to make sure there's kind of consistent messaging across. And again, to that view, to that conciseness, because you don't want to be saying something in your strategy is really, really important and then it's not mentioned anywhere else, or, the risks are completely contradictory to other parts of the annual report. And then I think that the last one is probably just benchmarking your annual report. So really kind of periodically, I think you can get really good insight, just benchmarking against peers on kind of length, clarity, structure, etc.
Thanks. Like some good practical advice there and good examples as well. If we move on then, it's a whistle-stop tour of audit committee challenges and issues, AI, artificial intelligence. What is the level of deployment of AI you're seeing within the entities? And what are the key risks you're seeing from an audit perspective for those entities as well? And maybe if we can take the last question as well, what is the level of deployment of AI amongst auditors, again, from your own personal experience?
So if I take the companies piece first, and I guess to kind of start with, like AI is not new. So, AI in a lot of forms has been around for years and has been deployed in companies for years. So kind of RPA bots, chat bots, etc. I think what is new is the type and the accessibility of the AI. So kind of generative AI, things like ChatGPT, Copilot, etc. It's kind of moved AI from, what I would say the back office specialist type into now everyone has it on their laptop, on their phones, everyone is able to use it. So that has changed the landscape. So I think every company really is at a minimum using some level of AI, whether it's at that kind of basic level of people using it to kind of generate content, draft, summarize documents, so emails, memos. We are seeing then entities kind of at that stage above, I think, where they're looking at how they use it in specific business functions. So things like AI kind of driven predictive analytics in, cash flow forecasting, sales, demand forecasting, AI kind of powered supply chain optimization, seeing a lot more smart automation. So, previously you would have had potentially automation of preparing your financial statements. The Gen AI piece of that now is, without you ticking the kind of 7 disclosures you want, it's taking your trial balance and it's figuring out what disclosures, it's drafting disclosures for you. So that's kind of the step up in terms of some of that automation piece. I think the advanced level, right, where you have AI kind of completely across the business and, you know, AI agents are making kind of all these operational decisions and there's very little human involvement, I think that's kind of limited to non-existent in Ireland. But if you look at the kind of Amazons or the Teslas, like that is how they are operating, you know, kind of almost end-to-end processes with, you know, much reduced human kind of involvement in those. In terms of the audit risk then, I guess, it's kind of creating new risks that I guess kind of the audit profession and companies are still kind of getting up to speed with. I think data is a big one. Brendan mentioned it in terms of data governance being a fundamental point. Obviously, these AI models run on kind of big, large volumes of data. So, you know, by definition, if the data is incorrect, if it's incomplete, if it's biased, then the results are going to be biased. And the AI models can be kind of black boxes, so it's hard to see sometimes actually how it's getting to the conclusion. So if you think about an audit trail and transparency, you know, there are things that we have to grapple with. I think the kind of speed and autonomy then of it means that sometimes people are over-reliant on the results and the kind of critical thinking or the review step can be missed. Cyber and data privacy are clearly big considerations. A lot of the models are kind of interconnected. They like rely on third-party platforms, so you're opening up new kind of access points and vulnerabilities. So that's a big area of consideration. And then probably the last one I just touch on, and it's probably a bit overarching, but it's the kind of accountability and governance piece. So obviously AI cuts across IT, it cuts across operational functions, it cuts across business functions. And so sometimes it's a little bit unclear as to who actually kind of owns it or who's responsible for the performance management or the risk management of it. And I think boards and audit committees as well, like they're really starting to build their expertise in the area. So sometimes then the oversight piece lags a little bit to the technology. I think, so your third question then in terms of...
Third question is and what are you doing and how is AI impacting, I suppose, the work of the auditor?
Yeah, so and again, similar to companies, AI probably in the form of analytics and routine automation again has been used in audits for a number of years. That step up that we're seeing now and has really gathered pace probably in the last kind of 2 years is that kind of, I would call it again, the Gen AI piece. So we have AI tools now that will test, you know, pretty much all P&L balances and a lot of balance sheet balances 100%. Kind of automation matching through predictive analytics with companies' data, but external data. We have auditing and accounting standard chatbots, very exciting for everyone in the audit industry. We have smart review functions, so tools that will do first review of work papers. We have checklist AI, so that does gap checklists on financial statements. And actually, every month or every couple of months, and Conor probably see this as well, like there's new tools, there's a huge amount in deployment and development. I think what I would say is that, you know, a bit to the data point, that the tools are only as good as the data that they can use. So if we have a company with a really modern ERP system, you know, it's much easier to deploy those tools. Where you have companies, and a lot of companies are on older accounting systems or there's a lot of data in spreadsheets, then obviously it's much more difficult to deploy them. And so sometimes it's just more efficient to use the kind of more traditional auditing techniques.
Thank you. And if we go back maybe to the audit committee perspective then, Aisling, like we're seeing very powerful AI tools being talked about that could be transformational. What's your experience and what you're seeing? Like, you know, how are you separating or distinguishing between the genuine innovation and the hype?
I must admit to being personally a little bit of a skeptic about the AI hype, because I think a lot of what we're branding AI now is really advanced automation and data analytics that have been being used in certain circles for quite a long time, certainly many years in my experience. So maybe there's a bit of an AI washing issue as well as a greenwashing issue. But that said, I think the potential is enormous, and I've seen some really powerful early examples, and Sinéad has mentioned some. I think the issue is around, and you've also mentioned this, Sinéad, is the keeping up with the governance. And obviously audit committees are not going to understand the specifics of algorithms or models, but we need to make sure that the accountability is clear, data quality, we need to interrogate that, and we need to ensure that structures are in place to ensure proper validation. And I think we need to challenge management about whether they are trying to be at the forefront of this revolution, and it is a revolution, or fast followers, because depending on the business and the specifics of the business and the competitive landscape that they're in, there are pros and cons. And, you know, a lot of exec teams are super enthusiastic and, you know, are firing ahead, and that's not necessarily always the best approach. Sinead has mentioned cyber risk. I'd also just kind of go, cyber is a known risk. We need to worry about the unknown risks. Every new technology has hidden exposures that take years to come to light. You know, we think about microplastics and forever chemicals. Boards need to ask, do we have the right insurance cover in place? Do we have governance structures to protect against emerging exposures? So that's not just a plug for me as the member of the board of a casualty insurance company. It's a serious question to bear in mind. And then just maybe mention AI in the boardroom. So I think we're just on the cusp of that. I think those of us who use board platforms are beginning to see, you know, those platforms integrate options like, you know, fast summaries and synthesizing information across complex board packs, and that's very useful, but we need to not over-rely on it as well. This is not something I've necessarily had personal experience about, but I've had conversations with people who are beginning to experiment with bringing AI agents into the boardroom, maybe one or indeed more, and how that changes the dynamics of the boardroom and the discussion and the debate. And there's some interesting emerging academic analysis which actually does point to the merits of that approach, notwithstanding, obviously, you know, it comes with risks as well. So there's a lot of food for thought for audit committees and boards.
Absolutely. You actually mentioned cyber there. Maybe if you could get Brendan to give me just, I suppose, your views on cybersecurity and risk, and it's getting higher and higher on risk registers. What should audit committees be doing in terms of preparedness, and do you see differing approaches?
Yeah, there's been a huge focus on operational resilience in the past year or two, particularly as a result of DORA and NIS2, in particular areas FS and infrastructure. But and the mindset of audit committees has moved very much away from security. It's not about being secure, it's about being resilient, because it's almost inevitable you're going to come under threat. And some of those, and it sounds like I'm catastrophizing, but it sounds like, to me, the systemic risks are a lot more proximate to us now than they were a few years ago. And it's a bit like COVID. And I guess the audit committees need to think about risk management generally, not just the disclosure of it in the financial statements. It's about providing oversight to management. Like nation-state conflict and actors, we've talked about it again, and you can have lapses there. Like the Jaguar Land Rover case in the UK recently, that is just, bears a lot of thinking about. You know, a 1.5 billion euro bailout for the supply chain of a firm. And actually, when you unplug all of that, it's probably a fault in the supply chain. It's the focus at the moment is on perhaps systems implementers and their ability to secure their own facilities. And one risk that's unique to Ireland, actually, and I'm a very optimistic person, but I must say that because we hold the presidency of the EU in the second half of 2026, we are right up there now in terms of being a target, in terms of our infrastructure, major firms and supply chain firms in the second half of 2026. I suppose, and the whole focus around DORA in the financial services sector, and NIS2 in particular, has been a lot on the supply chain, understanding it, mapping it, understanding what's there. And I know from a number of my peers that the US firms are actually gaining a lot of insight from the implementation of DORA in their European businesses. But I mean, it comes back to the basics of information, good data governance and information security. You know, good assurance, good training, good threat assessment, risk management, penetration testing, contingency planning, and frequently practiced incident response. I mean, these are all now basic things. There are a number of frameworks that all audit committee chairs should be familiar with, at least one of them: the NIST framework, the CIS controls, the ISO 27000. These are fundamental hygiene basic building blocks, together with a regular flow of information about the threat landscape, what's happening in terms of incident reporting, demonstrated preparedness. I think the one thing that's unusual about cyber in the boardroom that has come in very sharp focus in the last while is the focus, particularly in NIST 2, which if you're an infrastructure provider, there are now legal exposures that directors have at board level. Because if you're not prepared as a director of one of these firms covered by NIST 2, which I know is a unique part of the landscape, it's not everybody, it's significant infrastructure providers, you're personally liable. You know, at least the facility is there in law, and that brings it a lot way beyond the boundaries of what is in Irish law typically for director exposure. So those things are beginning to focus the mind. As I say, the fundamental building block of this and AI is good data governance and good data management. We'll come back to how we build those skills in a little while, Martin, I think.
Conor, just going ahead from Brendan there in relation to cyber security, data governance, what is the auditor's perspective on this? And like, how much are you involved? How much should be involved? Or can you give me
maybe
some thoughts?
I might give the auditor perspective and the Conor perspective. So on the auditor bit, like we're obviously governed by IAASA 315, which is the key risk assessment standard. I won't necessarily go into now, but that sets out the framework by which we go about cyber, and in many ways no different to IT audit more broadly. So it's involving IT audit colleagues. It's getting an understanding of the organization's governance architecture around cyber, a lot of which, like Brendan has spot out, like a lot of our response is driven by how well the organization is prepared. Have they had attacks? What's their security apparatus? And that then informs or drives our response. And that response will vary depending on whether there is, a climate risk has manifested or it hasn't. And the Conor view in this is that there's I do think it's an area where an expectation gap could arise around the role of the auditor in cyber, because the cyber attacks, we can all name a couple that have happened in the last 6 months alone. I think the malignant actors and the threats around cyber are only going to grow and grow one direction. And an audit is still in the context of a financial report that's issued. And obviously the business risk and the operations around that are clearly relevant to that opinion. But I do think there's a piece around just making sure, first and foremost, management, audit committees, et cetera, are all very clear on our role in cyber and what we do around cyber. And then even more broadly of just that wider stakeholders have an appreciation for our role in cyber, because I do think it's an area that is going to become more insidious and more relevant to our audit. And I'd perhaps link it in, I know you didn't ask, Martin, but AI of just like the role of an audit, I think, is certainly going to change. It's going to move to more real time. It's going to move to more tech-enabled. The composition, how we go about risk assessment, how we, Sinead might touch on it in a moment, but how our people are using audits, all this is going to change. But organizations are going to, and Sinead did touch on it, like AI specifically, but cyber no different. We get a lot of focus of what are we doing, but a lot of our AI is probably a good example. Like we have tools at the moment that we cannot use because the clients aren't able, or organizations aren't able for us to use them. Like I have one tool where we could do the revenue testing in 4 minutes. Quickly.
Yourself out of a job.
Yeah. 4 weeks of partner time in it. No, but it can be done a lot quicker. It's targeted. It identifies anomalies. It's better quality. And most of our organizations, we wouldn't be able to use that because they can't run the reports or give us the data to do it. You know.
I do think we will start to see that change, though, or gather pace, because obviously as companies start to kind of embed and get up the chain on AI, they'll be improving their own data, they'll be improving their own systems. So I think you'll kind of see that curve increasing.
Can I just say, like, a lot of us think AI appeared when ChatGPT appeared, but it didn't clearly.
Yeah.
There are tools in development now, and we were talking about it earlier, Aisling, quantum computing, for example, and that will be here in somewhere in 3 to 5 years. will completely blow that paradigm out of the. It won't even take 4 minutes, actually. And
Don't hold
like,
me.
We'll be out of the job.
I did, like, there are agentic AI and quantum computing. They are in development. They're proven. They just haven't been commercialized. They just haven't been put in a package that isn't bigger than a room or smaller than a room. So we do have to be familiar with that. But the underlying is good data governance, ultimately.
I do want to get onto some questions. So I'm maybe just going to get the two audit committee chairs just for final comments, just in relation to, I suppose, we've talked about a lot of different challenges today, and there's a huge amount of work for audit committees. But Aisling, if I start with you, what would you see what's coming to the fore for you as a key challenge?
Yeah, I mean, I think the key challenge really is around the skills that audit committee members need to have in this kind of obviously far more complex environment. And we need to, I think, as non-execs, continue to build new skills rather than rely on the ones that we developed during our exec careers. And I think it's very much the case that we also need to have on our audit committees some people who are still in their exec careers. I mean, to take climate risk as an example, I mean, I have peers on audit committees and boards who really are finding it difficult to deal with the language and the metrics around decarbonisation. It's kind of whole new language, and it's not easy to kind of get to grips with. AI is clearly now the next area, and that's an area where, given the demographic composition of audit committees, it's very unlikely we're going to have the skills there on the committee. So we need to make sure that we're getting the right advice and input. I think Brendan alluded earlier to the kind of the key attribute of professional skepticism, which I think, remains the bedrock. But I think we as audit committee and board members really need to be committed to spending sufficient time, which is likely to be quite demanding in terms of landscape and horizon scanning, and being prepared to go deep on the issues that are specifically critical for the enterprises whose boards we serve on.
Yeah, for me, it's all about skills. It's having that balance in the committee right and the skills mix in the committee right. And if I can use a poor analogy, it's like you learned Irish in school, but if you put a pack of accountants in a room and you ask them to deal with data governance, you're kind of faltering a bit. It doesn't come naturally to you. So, like structured learning, we had this discussion earlier on the week. You've got to go back. I went back and did a diploma in cybersecurity. We've got to go back and do something now in terms of AI. There isn't any way around this. This won't be done by periodical articles or coming to seminars. It just won't be done for people of our generation. Some of them, the younger people, are more digitally native. That actually, for me, is the biggest challenge, is getting the balance and blend of skills on the committee right for my clients and the ones I directly serve on. And it's people. It's all about people in the end to do the job well.
Thanks, Brendan. I think we'll move on to the next session, the Q&A. Hopefully we have enough time, because I want to see if there's anything coming from maybe if you're open to the floor first. Is there any questions? We covered a lot of topics here. I'm aware of that. Is there any particular questions that you had? Get the mic over there.
Yeah, it was really interesting as an audit committee chair myself. I've learned a lot. Just on the AI thing, do you think eventually that AI will help kind of bridge that gap between of information that we as non-execs have versus what the execs have? And will it be a tool that we'll be able to, I suppose, use to interrogate and to build up our own information and the deficits and the gaps, rather than waiting, when you're reading through a paper and you're saying you have a question and it's not there, that you'll be able to go and interrogate the systems yourself?
Brendan?
Yeah, 100%. I'll give you an example. I think risk management reporting will be radically transformed by AI. Objective scoring by AI of some of the measures, but also AI is really good at summarization and sentiment analysis. So if you want to say, as an audit committee chair, what have exit interviews told us about the employees? Big cultural point. What is the correspondence and the flow between ourselves and the regulator or a key supplier like? That can be done pretty quickly and objectively now, whereas you have to take your courage in your hand sometimes to ask those questions currently, it will transform areas like that.
With the caveat, though, which is just like it's not a great idea for university students to get LLMs to write their essays. We need to be mindful that the responsibility is ours and not just to take what comes out of the
It's a great starting point.
It's a great starting
Does that
point.
information asymmetry between yourself and management will be bridged?
Yeah.
Sorry, it's going to help it a lot.
But back to the professional skepticism.
Yeah, absolutely.
Yeah.
Any other questions from the floor? We have a few questions all right on Slido as well. So, okay. There's a few interesting ones here. Maybe one for the audit committee. If we actually maybe take the second one there. What is your view on reducing audit staff members and resorting to more application of AI in the audit profession? Maybe either Sinead or Conor, do you want to just touch on that and go to the audit committee members then?
Yeah, I think it'll be. There's no doubt there's going to be an impact on people, but not necessarily. I think it's the wrong way to frame the question. Actually, it's the type of people we will need for the audits as much as anything. I think AI literacy will become as important as financial literacy. The nature of engagement teams, you might have more data scientists, engineers, those composition of people, and looking at that in the context then of, do we need, tech does reduce effort and inputs, but everyone will know in our, you also need a model where the junior people become the managers who become the directors. And if you remove that layer quite materially, that obviously has a knock-on impact. So will there be an impact? Yes. I think and I know we've spoken about it, so Sinead, give your view. It's a don't know at the moment of the actual scale of the impact yet.
I have an interesting example. Sorry to cut across you, Sinead, because I was just kind of looking at this yesterday. So, this is not new. Radiologists were kind of 10 years ago. I think Jeffrey Hinton said, we shouldn't be training any more radiologists because, it's an area that relies on digital data. It's about pattern matching, and it's absolutely ripe for automation. Now, there are more radiologists being used today than there were 10 years ago. And the reason for that is that radiologists do more than read scans. And the technology is enabling them to do more and add more value in the healthcare system. So it's too early, I think, to say what the landscape is going to look like in a few years' time. It's all up for grabs, and absolutely what people will be doing will be different, but it's way too early to understand what it's going to mean specifically.
But those early learning roles, if you look what's happening in the tech industry, there are no junior developers employed anymore. If you have 5 years experience, you can run the AI, you can actually code it yourself with an AI agent. Yeah. If you're coming out of a computer science degree now, it's very difficult to get a job as a junior developer. Despite that, you would think there's a huge demand. There's not a huge demand. And I worry about breaking that link between the entry levels of the profession, which we all had to go through to get to some level of experience. That is a concern for the profession.
Yeah.
I don't know we have the answer to that yet, but we have to come up with a way to figure out how we get people that initial blast of experience.
And it's that shape piece, right? Because the kind of pyramid that we have always used, that shape has to change, and it's figuring out what that shape looks like. I think kind of two things I would add, in the last number of years, we have seen audit firms, us included, moving to more of an offshore-onshore model, and some of that kind of what I would call the junior tasks have been offshored. So we have been working through already then how does that impact in terms of onshore and, not reducing necessarily the graduate numbers, but that role looks different. And then I think the second thing I would say is I think it makes the profession more attractive, because if you have people coming into training contracts and previously that view of, I'll be doing the photocopying or I'll be ticking and bashing, etc., that's completely different now, and I think it's much more kind of attractive and interesting to people. So I think it's positive in that respect.
There is a view that the pyramid will become an obelisk.
A rocket, I've also heard, which I'm not sure what
if
it
you don't
means.
know what an obelisk is, like me, Google it later, but also Google the paper, Harvard paper on the future, and it's quite interesting. The layers of senior and judgment as opposed to the the peer of that.
Yeah,
you know.
they're repetitive.
Again, we have, I think, covered AI a lot, and I think, I don't want to speak for the two audit committee chairs, but using AI agents on the audit team, yes
Depends
or no?
on the governance.
Exactly, depends on the governance. So I think just as a final question there, do the panel members have a view on private equity in audit firms? Just something off field.
Like I think the attraction and the move towards it is a little bit to the kind of AI and automation, right? Because I think people are seeing the potential opportunity now for the mid-tier firms to be more competitive in that space. So I think that's what's definitely driving it.
I think it's all about transparency, and we've already had some conversations in rooms that I've been in around understanding what the model is and understanding the impact it has on the way the audits are being conducted. So transparency is key.
I think there are certain segments of the market that are going to be hyper-served, big global companies. A lot of PE is about creating global enterprises that can immediately respond to global needs. But actually, a lot of our economy is mid-tier and smaller. And I think some of those segments are going to be underserved for a while. I don't understand a lot of the consolidation going on at the lower levels, actually, in the accountancy profession. And it breaks that link of generating skills and business into ownership. Like for a whole generation of people now, it means ownership is going to be with financial investors rather than me becoming a partner and really owning some of this. So I think there are issues there, certainly, and their logic, which will mean some aspects are really well served and some parts of industry and the client base won't be as well served.
Okay. We could talk for the whole day. I think we have to move on. We are over time. So a big thank you to each of our panelists, to Aisling, to Conor, to Sinead, to Brendan. I think it was a very rich discussion, and deeply appreciate your time here today. So thank you for that.